Good evening, I'm Brigid Taylor and this is Currency Wars. In our highlights from the past week, the aftermath of the IMF deteriorating global growth outlooks has seen the global stock markets experience a significant sell-off. That with the S&P currently at May lows and the Dow Jones index trading to levels that we last saw in 2012. The local markets have not fared any better. The all-share index has lost almost 11% this year alone. There's been an element of risk aversion attached to the rising growth fears globally, but this is manifested more as a negative for stocks than for any other asset class. Emerging market bonds are experiencing a strong performance in line with G4 bond markets. The local bond market has seen strong foreign inflows derived from falling global growth expectations and the subsequent containment of the Fed rate hike probabilities. The trade-weighted performance of the rand reveals a less encouraging picture. It's dropped 0.8% yesterday and unwinding much of its progress that we've seen earlier this month. However, the rand has strengthened 0.5% since the last MPC. And alongside a weaker oil price, this is likely to tilt the SARB to keeping the rates on hold in the next MPC. Event risk will be particularly high heading into the medium-term budgets next week, Wednesday. This implies greater room for a reversal of the recent foreign inflows that we've seen, should the outcome disappoint. South Africa's Finance Minister Nene, over the recent days, has attempted to placate the sentiment leading up to the medium-term budget by emphasising government's commitment to expenditure consolidation. But the task is a large one, given development goals and also the bailout of parastatals such as Eskom. Now that we've seen the lay of the land, I'd like to welcome John Cairns from RMB. Welcome, John. Very nice to have you on the show again. So let's talk about the markets. It's really been a tumultuous week, not so much for the currency, but I mean, if we look at what's happened in the stock markets after that IMF statement, what are you hearing from your investors at RMB?
Well, no, Bridge, so you're exactly right. The stock market moves crazy. So S&P down 8%. Down 3% in one session alone overnight.
Yeah.
VIX up above 30, the 10-year Treasury bond all the way down. And the interesting thing, exactly as you say, is we're getting all these movements, but currency markets seem to be a little bit ring-fenced. You ask how investors feeling, I think nervous. I think nervous is the point. And I think we're starting to see that some of the institutions putting on some hedges are there on the top side. Corporates a little bit calmer at the moment. I think importers must be getting pretty worried though with these moves that we're seeing.
Well, I think so. I mean, if we look at, the investors in South Africa specifically, most of them express their views in the stock market. So the stock market's always moved in that serious direction. I mean, we talk about currencies ad lib as though the volatility that we understand in currencies is something that we see in other markets, and it's not necessarily so. So I think certainly had a taste of that medicine that we've experienced obviously ourselves. And looking forward, we've got the medium-term budget next week. There's a lot of talk around that growth deterioration in South Africa sitting at 1.4%. Expectation from the IMF. We've also got our MPC. The oil price has come down. The rand's behaved itself. So what do you think is going to be the outcome? Do you think it's a significant risk, or do you think we are making too much out of it?
The budget?
Yeah.
Yeah, no, it's a huge event. There's no doubt about it. The story is straightforward at 1.4% growth. So that's our own forecast at RMB, by the way.
Yeah.
Tax revenue not performing. Maybe it's going to be in 30 billion under budget for the year that's going to end early next year. The budget deficit is going to look worse. How are they going to manage it? We're expecting that the present budget forecast a 4% budget deficit for this year. We think they'll push that to 4.4. The reality could even be a little bit worse than that. I mean, the fiscus is in a terrible position, and that's key. Okay, after years of struggling with the budget deficit, we've got the rating agencies coming up. And they're all looking at these numbers, and the bottom line is we are going to see further rating downgrades.
Well, this is the concern. I mean, if you're looking as a government trying to maximize this budget, I mean, how do you tax people in an environment where you can't even hike interest rates, even though inflation's above the band? So you're in a really, really tough position. I mean, the consumer, we've seen the numbers, we've seen what's happened in terms of consumer spending. Consumers are under pressure. To tax them more in order to manage that is certainly going to put some further strain. We've got the Eskom parastatals that are now under pressure in terms of bailout. So there's all these additional factors that weren't necessarily budget issues previously in South Africa specifically. Yeah,
so we've had now 10 years, almost 15 years of relatively easy budgets. Remember, you go back to 1994, the budget was in a shocking position, right?
Yeah.
And by the time we got to 2007, the budget was in a brilliant position. Fiscal surplus, debt had been repaid. So we come with a lot of credibility, the country as a whole. But the just continued fiscal slippages over the past few years, there's not much further room. As I say, we're going to get the rating downgrades. You raise the prospect of tax increases. That's an interesting one. Our take at this stage is probably not yet, but it's potentially coming. So both income tax and then ideally, if they've got to raise tax, a VAT increase.
But that then draws to question, how are we going to get out of this growth slump? I mean, as a South African in South Africa who's under pressure anyway with regards to all the cost push pressures that we've faced with, whether it's petrol price increases, the rand that's deteriorating, obviously the cost push pressures coming through from our parastatals, the likes of Eskom, likes of various factors. You're getting it from all sides. And then on top of that, trying to tax the economy in order to make the budget a little bit more pleasing. That, in my mind, doesn't take us out of that curve. And I mean, we are on that downward slippery slope. So in your view, where to from here in 2015? Okay,
so I think you make a good point. So what we've done is for 10 years, almost exactly 10 years, is the consumer's been the driver of growth. And what's happening is that cycle is at an end. There's just no way the consumer can drive the next upward cycle. Over-debted, all the other factors that you've spoken about. What we need from a South African perspective, the real economy, we need exports to start picking up. That's where the growth has got to come from.
But then we need infrastructure, right? So we need things like the railroads to be effective. We've got to have infrastructure in terms of electricity supply, in terms of talking about the wages and talking about the unions. These are all issues that have reared their head over the last couple of years that we're aware of. Our rand hasn't been punished. So I don't know that there's that much emphasis been placed on it. But if you look at what's happening in business, specifically if you're trying to drive that agenda, that's not a 6-month turnaround, John. This is a long-term turnaround that we're expecting.
Exactly. And we've had 3 years of rand weakness now, and the rand's obviously going to be the primary.
But we're not seeing the exports.
We're starting to see it, Brigid, because interestingly, if you look at the first quarter and second quarter GDP data, exports for the first time in 15 years, well, a bit less than 15 years, are now growing faster than imports. So we are starting to see it. We certainly do have a lot of issues, all the infrastructure, etc., that you spoke about. Interestingly, we at RMB, we've run a nice little project now. We've looked at how exports have performed now in this cycle relative to how you'd expect. So in other words, we model it historically and then look if there's any divergence going on.
Okay, and so if you look at that model that you've drawn, which are the sectors that are seeing the most positive growth in terms of your exports?
Okay, so our model is only just at the aggregate basis because we don't have a sufficient detail because we need to do it in volume terms to break it out. But the bottom line is what it shows is exports are exports are 4% below than what you'd normally expect. So there is some evidence that exports aren't doing quite as well as they should be. Just to answer your question though, which sectors? So traditionally South African export is very slow to respond to currency weakness. And one reason for that is we just have such a big mining sector, 55% of exports. So you can't just go sink a new gold shaft just because the rand's weaker. So where you see the export growth, agricultural, manufacturing, services, etc., all the other sides,
well, that's brilliant.
which are doing
that's
quite
a good
well.
sign for the economy. I think if we can continue to face and place emphasis on those sectors that are potentially going to get us out of the slump that we're currently in, then that's a positive swing on it. So let's talk about, just for the investor, those guys that are sitting in corporates that have got portfolios overseas in terms of where the rates are likely to trade. We're currently trading around the 11.10 level. We've broken above 11, so we're in that range now, sort of between 11 and 11.20. Do you think that medium-term budget is something that people need to keep an eye on? What is your trajectory? What is the emphasis in terms of the momentum that you're expecting?
Okay, so first, if we just take it back to our discussion about the export growth and import growth, to me that's good evidence that the rand is now undervalued. I mean, all our rand models at RMB show that. Okay, but now we're seeing some evidence from the real economy. So eventually we'll get some rand appreciation, but the word there is eventually. The trajectory, as you well know, has been upwards in dollar rand. We're in this 3-year very firm trend that's been going up. It's still in play. As you note, there's a lot of risks going on. Okay, so euro dollar has been moving aggressively. We've got the medium-term budget. We've got a Fed meeting coming up. Got another SARB meeting coming up. Got another ECB meeting coming up. Also, what's interesting, we're doing some modelling work on volatility this morning. We haven't seen the vols in the rand really pick up yet. If you look at the international markets, exactly what go back to your first point about how volatile global markets have been. The rand's been a lot stabler. So it's fair to say that volatility in the rand could pick up quite significantly. So for the short term at least, I think the risks on dollar rand and on euro rand are probably to the upside, and potentially we could move quite significantly in that direction with quite a pick up in vols as well.
So if we've got the volatility, there is going to be the ranges to play. There will be opportunities to take advantage of rand at slightly stronger levels if you're an importer, but then obviously watching that top side. So if we look at the euro rand specifically, I'm going to ask you, and I'm going to make you put it on the block just now in terms of where your exact levels are. But do you think that the momentum now has turned, that the euro rand is also likely to weaken and continued on a weakened bias?
Let's not say on a continued bias, but at least now, let's say for the short term. So the next few sessions, maybe the next few weeks, I think the upside is on both dollar rand and euro rand.
It's time to pull out the big guns, John. So let's look at the actual levels for investors. Let's talk about real levels that we can look at in terms of the technicals. What are the bottoms? What are the tops? Let's focus specifically on the euro rand and the dollar rand. What are your views?
Okay, so the support levels on both those crosses are quite clear, because euro rand came down, we bounced off 13.95 a few times. Dollar rand's bounced off 10.98ish. So we got very firm support. I think the issues are more where it can run on the top side, not firm resistance levels there, except on dollar rand when we get right up to that 11.38 level. Sounds quite far away, but it's possible given the risk environment that we're in. Importers, I would be quite cautious at the moment. Exporters, maybe you can get some upside, so maybe it's worth holding off a bit before you jump in.
And do you think that the risks are skewed more towards, with the medium-term budgets, if you're an importer, to take advantage of lower levels rather than wait and see if we do actually dip below those current supports?
Yeah, medium-term budget is just one issue. I think what's going on in the global markets at the moment, just so much volatility, risk off, hasn't fed through into the rand. Maybe the rand eventually plays some catch-up. Rand pushes weaker. I think those are the risks, that eventually the rand reflects what's going on in the global markets. It's very strange to have this disconnect. It's not a normal environment at all.
Okay, thank you so much, John. And then in conclusion, the trading strategy for this week, be aware of those bases. They're very strong, around the 10.98 on the dollar rand. It's probably as good as it's going to get in the short term, and then around 13.95 on the euro rand. Looking for upside. We have got a lot of risk around the medium-term budgets. We are relying on a lot of foreign flows. If that scenario changes, we potentially could see further weakness. You're welcome to send me your comments or questions to @CNBC Africa's #CurrencyWars410, or myself personally at Brigid Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.